Okay guys, I'm going to go to Ask Scruff, and it's quite an interesting question. It's not a straightforward answer, but then again, none of them are. But let's have a quick look. So flick this over, come down into Ask Scruff, and it's from Casper. Little salute to you, kid. Right. I do think a video is kind of needed here. It's kind of a way of expression, but it's more, I wouldn't call it advice, it's just something to keep an eye on. Even though he understands everything in theory, unlike the wild wonder here, and as you can see, yes, she's shopping.
No, I'm not. Return.
Same difference,
No, it's not.
because you'll replace it.
Okay.
Anyway, sorry. You get the buyer sheet, and you complete it correctly, but when it comes to executing the trade, you overthink, debate, 5 minute, 15 minute, then overthinking shifts to the 1 hour, and in the end you don't place the trade because you're nervous, because you're uncertain. Lack of experience, possibly, and all to improve with time. What do I recommend to practice? And you've noticed that you're good with the fibs, analysing the chart, identifying your levels, but you struggle with direction. Right. It's not something that's uncommon, Casper. What you're looking at there is almost analysis paralysis. Now, that comes in different forms. You can have way too many indicators on your screen. Then you're kind of uncertain about what's going on. Now, the idea of the buyer sheet and the tool is to visualize everything in a simplistic form, and then you don't really need the indicators on the screen anymore. So that's one of the things that I would kind of look at. Once you've done your analysis, take the indicators off. And then what you're looking at is a raw screen. It's just your levels and the price, which are the constants on the chart. So it doesn't matter if you're looking at a monthly chart or a minute chart. Your levels will be in the same place. The price will be in the same place. Now, what happens with sort of your indicators, if you start looking at an hour's chart and then flick it down onto a 5 minute chart, well, your indicators are in different places because they're variable. Excuse me. Dear me. Oh, dear. Oh, sorry about that. Bit of a coughing fit. So, yes, your indicators can actually throw you out of whack because they are different. If an RSI on a 4 hour will be completely different to a 5. But as I say, your levels will be the same. So that's one exercise that you can do. Now, the next part is when you are worried about the bias. As we've discussed many times, your bias isn't as important as you think it is. Not when you're day trading. You need to be what's called market neutral. So instead of second guessing it, just take what your feeling is. So if you've done your bias sheet, you've gone through the multi-time analysis, and you can see what the dominance is, i.e. it might predominantly be looking like it's going up. Then as far as you're concerned, it's going up. That's it. You don't need to look for anything else. Now what you're doing is when you're looking at the 15-minute chart, again, it's gut feeling. So you're looking at a clean chart on a 15-minute. You're now just looking for a nice area that you can buy at. Now, that can be an hourly fib. You can look at whatever the key level is you put in place. Maybe even just drop it down and use a single indicator as a trigger point, like an RSI or a stochastic. So if you wanted to go long, you need to see signs of long. In other words, coming from the oversold situation moving up. But personally, I find the levels and maybe a candle count suits. So as long as I've got the zone correct, in other words, I'm in the right trading zone. Now you'd have figured that out with GoldenEye. That's dead easy. Level above, a level below, and the price is trapped between the two. And you've got an overall view to the upper side. Well, instead of just going straight to market and pressing the button, why not just use a pending order? And you place it above a candle of logical relevance. Now, there's many ways you can figure that one out as well. As you see, the 5 candle count back, 1, 2, 3, 4, 5. So you've got the current candle that's rolling. Inside it, you have a rolling 15 minutes. So that shows you the 15-minute candle. And then you've got one on the other side, just so you can almost see if there's a fractal in amongst that lot. If there's no fractal, it could be a bit of a range. So that'll then show you the range across the 5 minutes and that 15-minute central candle. And then you just need to place above or below that range. Now, if it's on a straight slope down or a straight slope up, you've got to be really careful, because you might actually be entering at the top of the market at that point. So therefore, that would tell you, well, maybe I've either missed the boat and I need to let it relax a little bit. So there's plenty of things you can do and exercises, but just to round this off quickly, I would say do your analysis, put your levels in, key fibs, etc. Once the price has come down into a key level, then look to start entering in and around that point, because there's a high probability of a bounce, and it'll either bounce in the direction that you want to go in or against it, and then target appropriately in and around that. But whatever your anchor is saying, if the anchor says buy, you're pretty much looking just to buy it. And then that way you're not second guessing the market all the time. You've already got a definitive choice in front of you. And that's it. And once you have made that choice of bias, take the indicators off. The indicators, they can only show you what's happened in the past. They can't tell you what's happening in the future. And they are just a guide. So that might help you by removing the indicators. Hope that helps in a strange way. We'll explore it more in the live streams. Just pipe up and shout, and I'll do my best, and we'll try and explain it on a live chat for you. Catch you soon.